Is there genuine hope for the bulls, or is this rally towards the upside on a small time frame just another bull trap? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. We're going to go ahead and take a look at Bitcoin today and talk about the recent smaller time frame rally towards the upside. Obviously, we're broken out of the POC, we're broken above our horizontal resistance range, and we have also broken from our diagonal resistance on the 4-hour chart. So we do have a few things to talk about today. We're also going to talk about the macro and discuss the implications this shift in price action has had on the larger time frame, particularly on a couple indicators, and of course jump into some market data. Before we get into it, smash the like button, hit the comment button, of course subscribe to the channel. We do daily technical analysis, updates, and analysis of Bitcoin, the most accurate and reliable sources you can find on YouTube right over here. Also guys, if you're interested in joining our Telegram channel, we do have a Telegram channel. You can get access to it by the second link down below. We post charts, analysis, updates, videos, information, news when there is news events, and a lot more on over here. Really beneficial to join up to this channel. And of course, if you're interested in our VIP channel, you get access to all of our trade signals, updates, analysis, and exclusive VIP group chat. Let's go ahead and jump into the video, and we'll start with our market data as we usually do. For the week, we're up 1.92%, and that will be consistent for the month as well as for the quarter. We are in the green, so it's good to see. We're just over 1 week. Well, we're currently on the 7th day of January, so we're just coming over the 1 week mark for 2023, and currently Bitcoin is in the green. It's really nice to see some green on charts. Obviously, the question is, will this continue, or is this a consolidation and then a resulting crash? And that's what a lot of people are still expecting. Volatility is actually still falling, which is very surprising to me. 1.33. This is low. I guess the last time we saw volatility around this level and lower was the 26th of July 2020. Prior to that, we saw volatility around about this level on the 27th of March 2019, and then prior to that we saw the volatility this low on the 30th or the 20th of December 2016. So this is literally historically low levels. The last time we saw this again would have been at that bear market bottom, and of course, like we said, that COVID crash, and again like we said in 2016. So there's only been a handful of times, guys, in the last 7 years now where we've actually come down to these low volatility levels. 1.33 is nothing. It's absolutely tiny. Moving on, volume and liquidations have been pushing upwards. Of course, we can see volume pushing up as we started seeing more liquidations, and that would be attributed to the fact that we have seen quite a strong 4-hour candle. A couple of hours ago, of course, that was overnight in Australian time, so maybe during the day for American time, you would have seen a break out of its trend line and quite a strong range to the upside. A lot of coins did rally, a lot of altcoins broke out of some of their structures, which was quite surprising, as just prior to this breakout, we did see quite a strong reaction to the downside, losing that POC, the DXY rising quite aggressively. Let's go ahead and talk about the broader markets, then we'll jump into Bitcoin. So we saw the DXY rise quite aggressively, but we never broke above that key rejection zone, which was at 105.5 level. As you will have noticed, you've been paying any attention to the channel over the last, would be about a month now. We've been talking about the DXY basically every video, and of course we have been saying that the key level we need to break above, of course, to see a swing upwards, is going to be these two horizontal resistance levels. These are 2 points of massive resistance and points of which we could see reversals. We did see a break of that lower one at 104.5. We pushed up to 105.5 and heavily rejected back down, not only through the 104.5 but also back into this diagonal resistance. So not looking amazing for the DXY. A lot of weakness over here. Of course, the market is closed currently for it, so we're not able to see any live updates on the DXY. So it'll be very interesting to see what occurs during the open on Monday. I think we're going to see a definitive move occur on the broader markets and as well as Bitcoin next week. I think next week's going to be quite an important week considering what we've just seen on DXY and considering how the markets are actually shaping up in regards to the recent moves on the short-term time frame as well as altcoins. So next week's going to be a big week, I think. Next week's going to be a big week. Dow Jones has actually broken towards the upside. We're pushed back above our neutral horizontal consolidation. In terms of shorter time frame structures, I haven't actually looked at it. I'm not entirely sure what we are seeing, but we did see a horizontal consolidation. We could potentially be seeing some degree of a bearish structure over here, some sort of rising channel formation. This is definitely a potential formation we are developing before we see that next leg towards the downside. Of course, if we go ahead and zoom back out, I'll go back to that daily chart, we are still very much in a downtrend, right? This is still very much a downtrend. We had our uptrend, we had our bearish divergence, we have developed a downtrend, okay? We are still in a downtrend. For us to break out of this downtrend, we're going to need to see a break of this local high. Importantly, 35,000. Breaking over there will send us upwards. Until then, we do still have that risk of a continuation back towards the downside and potentially lower. So the downside risk is still there. The upside continuation is not being confirmed yet. And this is quite a common, I would say this is the common trend across the current markets, including Bitcoin. We're in this weird neutral position where we're consolidating without a definitive direction. Same thing goes with S&P 500. We are in this consolidation phase. We've broken slightly back into this range, but again, this range is resistance. So we're currently in resistance underneath our diagonal trend line. We are in a downtrend until we can break through these levels and take that next high back to 4,300. Otherwise, we are coming back down to 3,600 and potentially lower. Again, this is just what the chart's saying. Nothing more to it. The price action is telling us exactly what we need to wait for to see those continuations upwards and downwards. Until those happens, we can't really do much but wait. Interesting enough, we did see the bond yields get wrecked, and I mean they got wrecked. We saw the bond yields fall massively, particularly the 2-year government bonds dropping heavily from their support ranges right through them and downwards, again contributing to the fact that the DXY did drop and the markets have seen again a little bit of a rally. Again, we'll have to wait and see what happens there when the markets do open. So let's talk about what is going on with Bitcoin, and then we'll talk about the macro. And I want to talk about a bunch of indicators today. The purpose of today's video again is to go over the indicators on a larger time frame, on the smaller time frame, to dissect what's happening to the price action, talk about not only what we need to expect, but again, what the markets are telling us. So again, let's go ahead and jump into this. So what we have seen, to reiterate, we saw a breakout of our downtrend, okay, our short-term downtrend. We saw a breakout of the horizontal resistance range, which was sitting between 16,800 and 16,900, represented by that gray box. And we saw a break through and above the POC level, represented by that red horizontal line extending from the upper highest point of the VRPV, which are these volume ranges you see on the side of the screen over here. POC sitting around 16,822. Currently, we are printing some neutral candles above this horizontal range. This could indicate one of two things. Depending on how they develop in the next couple hours, it could develop into some bearish candles, bearish engulfing candles. It could result in a reversal back towards the downside. Depending on how they develop, they could develop in a point of which we find support above this horizontal range and continue towards the upside. Right now, we are looking for potential longs on these coins, as we do have this directional break on the downtrend pointing upwards. We have a bullish consolidation over here. For breakout, we do expect some degree of continuation upwards until proven otherwise. Now, I wouldn't just be jumping in blindly here. It would definitely be a higher risk play. I'd be looking and analyzing other charts and coins, particularly such as Bitcoin and other altcoins, looking for setups that could potentially develop into continuations. Looking at the chart right over here, do we have any sort of bullish or bearish structure forming? Similar to what we saw on the Dow Jones, we may have some degree of a rising channel developing, although it would be a little bit more of a sketchy rising channel, but a rising channel nevertheless. And therefore, again, we do have that potential to see a rejection here and continue towards the downside. As you have heard many times on this channel, when we have market structures such as this triangular formation here, or whatever you want to call it, okay? And then we have, near the apex of its structure, a secondary structure develop out of an extensionary phase of the current structure. Generally, the current structure needs to be held on the back burner first until we break out of that extensionary structure before we can guarantee that this main primary structure has been broken. The most easiest example I can give you would be the chart on Bitcoin, okay? We have a very obvious example here. We have a descending channel formation, okay? This is a descending channel formation. Where is my chart? Sorry, wrong one over here. We're taking from this high here, but that was the bearish divergence high. We have our descending channel formation. We had points of retest, okay? We can go ahead and clone this one over to the bottom side. Okay, we have our descending channel. Here it is. At the end of the descending channel, we have our falling wedge structure. Technically, we have broken out of the descending channel, and therefore we are bullish, but that is not enough of a guarantee right now, as we do have the falling wedge structure, which was still underneath a resistance, which was developed and created within that descending channel, and therefore we are still within the bounds of that structure, and therefore this break of the descending channel is not enough to validate or confirm the swing towards the upside. Same thing goes with what we're seeing here on the Bitcoin chart. Although we have broken this downtrend, we are still within a rising channel which is developed from within this primary structure, and therefore if we do reject from this secondary structure, we can very easily push back into the primary structure, labeling this as a fake out. So we do have to be aware of that. I'd be looking for validations that this structure does not remain apparent. I'd be looking for some nice 4-hour candle closes above the diagonal as well as this horizontal range. I'd be looking for local highs being taken out. I'd be looking for swing upwards and some strength to be shown on the momentum before I look for any entries, and these are things we'll look at in a second. Looking for an honest, reliable and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to the reward center, where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. If we do, for devil's advocate, if we do continue towards upside, it's very obvious where we're going. Like we said already, our targets are very clearly labeled by these gray boxes. These are all points of potential resistance what we have seen in the past, okay? These are very, very key levels. Again, levels that aren't of no surprise. These are levels that we've been talking about for a long time. Moving past 17,400, we will inevitably retest 18,000 to 18,700 horizontal June to November resistance, a big resistance range, a resistance range that is incredibly important for us to break to the upside. And obviously, if we do continue towards the downside, hypothetically, we do actually fail to remain above these levels and push back towards the downside, we can expect these red levels, gray levels, and green levels to be inevitably retested. Whether or not they find an active support or whether or not they break down below is another question, but I do believe if we end up retesting 16,200, we are going to be heading back to 15,800, and of course I do not believe we're going to find support on here for a third time. I think we will fall through here and inevitably head down to 13,900 to 12,000 on the chart, which is, as a matter of fact, the strongest horizontal support on the entire Bitcoin chart in the history of Bitcoin. Do not mistake that. 12,000 is the strongest horizontal support on the Bitcoin chart in the entire history of Bitcoin. There has not been a support stronger than 12,000, and there has not been a resistance stronger than 19,200. So we are very much between what you would call a rock and a hard place. Look where we are. This is our strongest resistance over here, okay? This peak over here. This is our strongest support over here. We are basically directly in the center. We are basically consolidating directly in the center. There's a lot of indecision and a lot of consolidation and a lot of uncertainty in the market right now. Our bullish trigger for the continuation upwards on a macro scale occurs above here. This is that bullish trigger. Our bearish continuation for a continuation downwards back towards this range occurs at that 15,800 level. Again, as we start losing these higher volume ranges, we're pushing into these levels to find potential support and obviously continue back upwards. It would take a lot for price to push below 12,000 on the charts. I think it's incredibly unlikely, like I said already. Not impossible, I think it's incredibly unlikely. You're positioning yourself against the probabilities if you expect the price to move deep below $12,000. Again, it is possible, but it is highly unlikely according to our historical volume ranges and the price structures on the charts. Moving back to the Bitcoin chart on the larger time frame over here, before we get into our technical analysis, which we'll go ahead and get into in a second, we are going to be taking a look, if I can get the chart back. Looks like the chart has disappeared. Well, what we can do is we can go ahead and take a look at our other chart. I'll go ahead and try to refresh it one more time. Okay, here it is, it's back. I don't know what happened there. The chart just disappeared for a second, that's okay. What we are looking at over here again, once more, we do need to break above that June to November low, sitting around 19,200. You can see this peak in the VRP right over here. This is that key level we need to break above. Not only breaking above that level will inevitably break us above the 50 EMA on the 2-day chart, signifying a potential short-term shift in the macro trend. Important, a short-term shift in the macro trend. See, the 50 EMA red line. Not only will that break us above the diagonal trend line of the falling wedge, which will confirm the breakout of the descending channel formation and flip the market structure bullish, but in terms of historical volume ranges, will be above the major resistance, which is at 19,000 resistance, putting us right above historically strong support. So we're going to have a lot of bullish momentum start to develop as we push up past this $18,000 range into $19,000 and above. Where can that take us? Very simple, guys. We're looking for the key rejection points on the larger time frames or key support levels. Looking at the chart, we're looking for our break point at the December 2020 over here in December between 22,500 and 23,900, and we're looking more importantly at our $30,000 June to July low in the bull run, of course, as well as the first initial retest in January 2021 and our consolidation zone in May 2022. This, of course, is our macro trend trigger. So macro trend trigger here, meaning if we break above here, we are in a macro uptrend officially, okay? If we break above these key points we talked about over here, what we're seeing is we're seeing a reversal develop. This is a macro reversal develop, okay? This is a macro trend confirmation. This point here is the key trigger or the key resistance that is going to either result in reversal failing or the reversal facilitating a potential macro reversal. Key levels, okay? Let's go ahead and jump into the technicals really quickly on the smaller time frame, on the macro time frame, and then we'll end the video. I hope so far the video has been beneficial, informative. If you have any questions so far, leave them down in those comment sections. I just want to go ahead and delete some of this stuff off the chart. Actually, I might as well just delete it all, be a little bit easier. And let's go ahead and bring up some technicals. We'll start on the daily chart, then move on to the larger and smaller time frames. So looking at the VRPV, it's very obvious we are still within the bounds of high volume range. We have not quite broken over that right over here. It's sitting around 17,000. We are currently under 17,000, which is not only a gain, a point of major resistance. We know it's a resistance because we have a massive chunk in volume and we immediately drop down, indicating we haven't had as much price action above here. We've had a lot more price action in this range, indicating a gain to break above here. We will be pushing into a lower volume range, which must indicate this point of difference, this point of reversal, this flipping point is strong resistance. Not only the 17,000, the 17,000 is a psychological resistance, a point of which on the chart people are more likely to be placing orders, selling orders, ECT. Okay, so we've got a couple resistance point over there that we do need to keep in mind. Looking at the VRPV here, it does indicate basically what we're talking about. As soon as we push through that level, we do have this lower volume range all the way up until that 19,200 chunk, which is a POC on the larger time frame, which is that key trigger point we need to break to confirm we're going to see a reversal. Not only is that reversal going to happen at that point, but we're also going to clear this entire structure, this entire range that we've been developing for the last couple months down below since November, early November after the FTX crash. Very important times to come for Bitcoin if that occurs. Looking at the daily, our 50 EMA, of course, is starting to pinch. We are seeing consolidation, we're seeing a compression and expansion. Obviously, we have expansion happening over here, we have compression over here. we have compression and expansion. Again, with this expansionary and compressionary structure, we generally do see a strong directional move to follow. I can show you many examples, particularly on larger time frames. We can see over here, for example, let's go to a larger time frame, maybe like a 3-day chart. I think the best example I can show you would be the June, I think it was June 2018 bottom period. It was the most clear example of what we see from compressions and expansions for the 50 EMA. But generally what we're looking at for the price action in regards to what we're seeing here, I think of it like a channel. So we have a few things. We have the smaller time frame moving averages, okay, which makes up this middle part of the channel. We have the 50 EMA, which makes up the upper resistance, okay? We have our lower structural supports, and then the price action moves between. So generally when the price action will move above the smaller time frame moving averages, such as these blue lines over here, which represents the 4, 15, 17, 22, 26, 28, and 32 moving average, we generally see that continuation up to the 50 and a potential break of the 50, okay? So that is generally what we're seeing over here. We can also see compression below the smaller time frame averages, but generally when we do break into it, we follow through to that 50 where we get rejected or we break out through. You can see many examples over here, such as here, we break through the smaller time frame averages, we push up and reject from the 50. Same thing, we break through here, we push through the 50, and again, the flip side on the downside, exactly repeating. So generally what we're looking for here on the daily is going to be that break of the 50 EMA, which is going to happen just over 17,000, which is going to be a potential indicator that the short-term trend is starting to gain some significant strength. Of course, if we go ahead and expand that to a larger time frame, the picture is going to be painted a little bit differently, and you can see how the 50 EMA is now much more expanded from where the price is. Again, breaking over these points will only start to signify even stronger points of indication that the trend is getting stronger and stronger and stronger. Again, the larger time moving averages are slower, they're more smoothed out. So when we break a moving average on a larger time frame, it has more significant weight in terms of what the trend is actually doing and the overall strength of that trend. Let's go back to this chart to take a look at another indicator. The other indicator I want to take a look at is that RSI. And again, the RSI is another one we're really looking at closely on the weekly chart as we're coming up on a major resistance and a potential breaking point. As we approach major resistances, there's always a chance we see major breaks. And of course, these are things we need to consider when looking at macro reversals, is what is the momentum actually doing here? So let's go to the weekly chart. Let's bring up that RSI. We'll draw it in. What we can see over here is, of course, a potential breakout of this RSI on a weekly. Now, the reason why I say it's not confirmed is because the RSI works in a pivot method. So what we'll have 1 week open over here, okay? We'll have the candle or the RSI on the histogram move from this point within the week. Within the week, it can go up and down, up and down. When the week closes, it will print that point and pivot from the next point. So during the week, it can look bullish, it can go neutral, it can go bearish, and then finish bullish, and then print that point here, and then the next pivot will start. So right now, we are seeing a pivot on the RSI above that downward sloping resistance, indicating a potential break and shift in momentum towards the upside, which of course by no means is incredibly bullish, as the momentum has been in a macro downtrend ever since December 28th, 2020. Ever since December 28th, 2020, our momentum has been in a downtrend. We'll have to double look at that. That's been a long time. That's over, what is that, over 2 years? That's over 2 years, I think. I'm losing my mind here, guys. There's a lot of numbers. Over 2 years, I think. Let me just double check that. Over 2 years, that's 735 days. So we're getting close to over 2 years of being in macro downtrend. So this is a significant indication. We're breaking, we're shifting momentum towards the upside. Of course, that could definitely propel the price upwards if we do have that break. There are a few other things we're looking for, of course, like I said, is the EMA crosses. The RSI break alone is not enough to confirm the reversal. It is indication that we could see potential reversal, but we do need to break above that $19,000 range. Of course, that falling wedge structure, of course, the 50 EMA on the 2-day. These are things we need to see happen in conjunction with each other to add points of confirmation on top of each other to be more confident in the direction the price will be going. Again, there is no need right now to be overly bullish, but there is definitely a need right now to be aware of at what point should you start to become more bullish? Because that is the point where you're going to get the best price action, the best decisions to jump into the market and acquire some coins at the lowest price, the least risk available. I'm going to leave the video there, guys. If you have any questions, leave them down below, and we'll catch you tomorrow. Cheers.